Good morning. This is Travis Bement with YourOrlandoMortgage.com, and here is my economic commentary for the week of August 3rd, 2009. Rules, rules, rules. With the economic and financial crisis still fresh in our minds, it should come as a surprise to no one that a number of new changes and regulations are still being placed on the mortgage industry. Today I wanted to talk about those and let everyone know how they will be effective. The guiding forces in these changes are the Home Ownership and Equity Protection Act, or HUPA, and the Housing and Economic Recovery Act, the HERA. Both were passed in 2008 with a timetable for implementation for the various changes. Most recently, the Mortgage Disclosures Improvement Act, or MDIA, rolled out for all new loan applications started on or after July 30th, 2009. Many lenders, me included, are very supportive of this law. It requires that the Truth in Lending document, or the TIL, be signed at least 3 days prior to a loan closing. This should eliminate the bait-and-switch tactics of unscrupulous lenders who promise one loan and then deliver a more expensive version at the loan closing. If the annual percentage rate on a loan increases more than 0.125% or an eighth of a percent from the original TIL, then the lender must get a new document signed and wait 3 business days before closing. The only drawback from this change is that it may slow down transactions where multiple changes are made due to sales price, seller concessions, and the like. Another possible issue, the fee for closing charged by title companies affects the overall annual percentage rate. In many cases involving short sales and foreclosures, title companies are charging significantly higher fees. I, for one, will be placing larger figures on my good faith estimates for transactions involving short sales and foreclosures. For a rule that many of us do not like, the state of Florida is currently debating requiring all mortgage lenders to submit a yearly credit report to the state in order to be a licensed lender. While the idea is great, the thought of having your personal credit report available as a public record with only your Social Security number blanked out is very unnerving. This is coming from a state that previously allowed convicted felons to sell mortgage loans. Not to mention, the state of Florida has been known to accidentally release all kinds of personal and confidential information over the years. In other news, while inflation fears are high, rates have come down slightly in the past few weeks. Many sources say that U.S. banks, many that have previously received bailouts, are purchasing U.S. Treasuries. Currently, the bank ownership of Treasuries are up over 15% since last year. Look for the pressure on rates to continue, barring any dramatic change in policy from either the Federal Reserve or the Treasury Department. Thanks, and we'll see you next week.